Welcome everybody this evening. How to consistently grow a small account. Again, my name is Don Kaufman. You are watching a TheoTrade presentation. A risk disclosure. We're not financial advisors nor broker dealer. I feel because it's football season, you can't do this without the written, express consent of the National Football League. We have to throw that in there, right? No soliciting, no recording, no feeding the monkeys as well. Copyright disclaimer, this is ours, this is not yours. The real reason I put this one up here, this is important to me. If you ever need to get a hold of me or anybody at TheoTrade after this evening, again, we're based right here in Scottsdale, Arizona, or 800-256-8876. The way to get a hold of me after this evening, people always ask that, support@theotrade.com. We use what is termed a common inbox here at TheoTrade, which you just go to support@theotrade.com and say, hey, I want to get a hold of Don or I want to get a hold of any of the other instructors, and we send it right to them. All right, good. Got through it. This is why you are here. Listen, by the end of this webcast this evening, okay, I want you to walk away with knowledge that you can use literally tomorrow. So the first thing is, why traders and investors alike just outright fail with a lot of the strategies they embark upon. We're actually going to show you a strategy that's really, really commonly used in this business that is very much a recipe for disaster. Number two, why you need to be cutting risk in order to produce consistent 55% returns surrounding high probability movements in a stock, an ETF, or an index. I'll explain the 55% returns, but you actually want to cut risk to get consistent. Number three, learn to grow an account with high degrees of consistency, okay? Even in a world filled with tweets. It's one of the things I just can't point out enough times this evening is that you got to recognize people have. Some of you guys are going to have $2,000 accounts. Some of you guys are going to have $2 million accounts. Listen, we have almost 1,000 people on this evening. The one thing, though, I just want to hammer, okay, and hammer away on is that, people, you could be just one tweet away, right, from making or losing, okay, tens of thousands of dollars. And that's not right for most people. And we're actually going to pull a high amount of that risk and a high degree of that risk away while adding some consistency. Number four, how you can trade without having to continually monitor the positions. A big portion of this is what I call set it and forget it order types. Good till canceled order types, okay? But we're going to get really specific with the high probability strategy that I'm going to talk about tonight. Then that's why you're here. Another thing, right up front, we have a little bit of a gift for you. Here it is. Stay with me to the end of the webcast this evening, okay? There's an indicator that I talk about just, okay, incessantly, nonstop, and it's an SPX, expected move indicator. It's something I talk about on evening videos and the weekend videos, okay? It's 3 years of weekly expected moves, okay? It's all of my hand-calculated expected moves, and it really is. It's like an indicator that changed the way that we view markets, okay? Tonight, you have to stay tuned to the end of the webcast. I will give you a specific link to be able to access this particular indicator. And quite frankly, we want everybody to have this indicator, okay? To me, it's of critical importance. Again, if you've never seen the expected move indicator, again, just stay with me right to the end of the webcast. This is effectively what it looks like. It's something I bring up again constantly, but it's a weekly expected move ranges. It's giving you ranges onto which the marketplace is moving on a week-to-week basis. Those ranges are they're derived from the options chain. Okay. Then we have highlighted candles like here and here and here and here. And those highlighted candles, they're breaches, okay, of expected move. And what this study actually does is it defines efficiency or lack of efficiency in markets. It's awesome, okay? It doesn't matter whether you trade stocks or options or futures, you need this indicator because it'll actually tell you, all right, if the market's, basically the way to put it, are we getting wild and wicked, or are we actually going to be much more range bound? And that's a critical portion of this particular indicator. Again, it's the SPX. You do have to stay tuned to the very end of the webcast, and we will give you a specific link for it. All right. Before we get rolling, housekeeping. So some housekeeping. Now, what we're talking about tonight, it's a skill set, okay? You need to pay attention during this following course material. Now, tonight, I'm probably going to be another 70 minutes. Is that all right with everybody? Okay, that's about how long we're going to run tonight, but another 70 minutes. Listen, because this is a skill set, shut the door, right? Turn off Skype, turn off chat, Spark, whatever you guys are still on, whatever else is distracting you. Close Facebook, burn it preferably, okay? Phones, put them on silent mode. Seriously, by the way, the Skype, my Skype is on right now, literally, okay? Turn it off during this because it's such a distraction. Kick out the kids, kick out the grandkids. However, your dog, the dog can stay. And a cat too, I guess, if it's quiet. Listen, all I'm saying is you took the time to be here this evening. This stuff's important. It's especially important to me, okay? I hope it's important to you. Just focus on being here. Now, which brings me to the point of why I'm here, okay? Well, I watched order flow for 15 years. That's why I'm here, okay? I have a very, very rare skill set, which I'll explain. So I grew up around traders. I had an uncle that started trading in the 1970s. My uncle actually founded a firm in the 1970s. He owned over 500 trading seats on exchanges worldwide. The firm, called O'Connor and Associates, eventually sold itself to the Swiss bank in 1992. It was a multiple billion-dollar deal. It's how I got involved in trading. They didn't necessarily, this was before me, but I got involved in the late 90s. I actually started trading in the late 90s. Had a cousin that traded on the floor. I went to work for him just a few years after I started trading. I was actually invited to a startup brokerage firm called Thinkorswim. I built, ran, executed all the education business for Thinkorswim and helped take Thinkorswim into a public company in 2007. We were then acquired by TD Ameritrade in approximately 2009. And again, at that time, I built and ran education. I ran education for TD Ameritrade, and at the time was 7 million clients. More importantly, though, I had access to the largest retail order flow in the entire industry. Nobody, okay, had more trades going through at the time than Thinkorswim and TD Ameritrade, hands down. And people ask, well, what's watching order flow? It means I had access to everything that you did, everything you did, every trade, okay? And what we did is we studied you, okay? So specifically my group, which was the education group for TD Ameritrade, we studied hundreds of thousands of clients. Literally, we had 7 million access to 7 million accounts, but there's hundreds of thousands of clients that we ran studies on. And what you're going to learn here tonight comes from watching billions, okay, in others' mistakes and the knowledge of what works best for retail traders. And that's why when people say, what kind of drives you? First of all, I watched order flow for 15 years. There can only be maybe 4, maybe 5 people in the entire world that have had that kind of experience and are willing to talk about it. And it's a big portion of, what TheoTrade is about. So this is me. This is me a little bit more recently. That was actually TD Ameritrade's network. So they have me on the network from time to time. This one was just, 2 weeks ago. I was out in Chicago, spent a little time on their network. This is me in one of the, one of the more memorable experiences. They pitted me, Don Kaufman, against Mr. Wonderful himself. I don't want to ruin it for you, but the guy, he's like the nicest guy. We were delayed while we were getting ready for CNBC, and I must have spoken to him for a good 30, 40 minutes. By the way, that's Kevin O'Leary. 30, 40 minutes prior to this particular interview. Just the two of us talking in each other's ears, okay? He's a great guy. I didn't want to ruin it for you, but he is. All right, let's get down to it. Listen, risk. You got to realize, tonight and moving forward, your money's on the line. And there's an aspect of just being involved in markets, okay? An aspect of being involved in markets that people aren't aware of. And it's how you handle your risk, because it's directly correlated to success in the markets. That's where a lot of people, they talk about trading, they talk a good game, but you got to follow this and the MACD and the Fibonacci and the Bollinger Band. I'm not going to start there. I'm going to start with how you handle risk is directly correlated to success in the markets. Too much risk. What are you going to do? You're going to panic. You're going to close positions continuously at the worst possible times. But hey, at least you're consistent with your panic, right? There's a degree of consistency. Now, I like to make this interactive. I don't want to be the only one talking on here. And you guys, listen, when you're joining us, okay, live this evening, I want you to be able to interact. How many people have ever panicked? Okay, panicked the worst possible time. Like literally, you panicked, okay, you bailed out of a position. Moments later, the market's effectively turned around, and you could have been somebody. Anybody ever been there before? This is when you're supposed to say yes or no, and it's okay. Like again, it's here. This is now the 12-step program, right? Admitting it is the first step. Okay, listen. The reason this is the first slide, I'm just telling you what I already know. I know what you are. Okay. And when I say that, I'm not saying facetiously. I know exactly what you are, okay? Because I've looked at hundreds of thousands of accounts. Guys have to understand, the buck stops here, okay? I've seen what works, what doesn't. I watched the entire financial crisis, okay, behind about 20 monitors and just watched absolute carnage. Listen, one of the things that drives me crazy, one of the things I'm going to drive home today, what doesn't work gets repeated over and over again. One of the things you got to focus on, here's what works, okay? I love this little saying. Success is a series of small wins because it's completely and totally applicable to the marketplace, okay? You got to follow a system that has been sourced, okay, from hundreds of thousands of people like you. That's one of the first critical steps. You got to follow stuff that's going to work, not just, work for who? For you, okay? You got to cut losses and use a repeatable strategy to obtain incremental returns. In this strategy, we're not trying to hit a home run. We're about incremental. Successful trading and investing strategies exemplify, okay, these following principles of building a trade. Now, when I say that, okay, we're about to get into what I term principles of building a trade, okay? So specifically, when we're going to approach this marketplace, this is how we're going to approach it. You ready? Okay? Trade logic, allocation, directional bias. Trade logic, allocation, directional bias. That's the principles of building a trade. If you look at everything that we do here at TheoTrade, it follows, these, three pieces of what we're going to term criteria. If you've never heard the term criteria, it's like a recipe, right? If you're going to go out, you're going to bake a cake, you're probably going to follow a recipe. If you're going to go fly a plane, there's going to be a checklist, okay? Well, to kind of kick off the idea, if you will, of a checklist, we use some guiding principles. We use trade logic, we use allocation, and then directional bias. Now, if you've never heard any of this terminology, let me explain what trade logic, allocation, and directional bias happen to be. First of all, trade logic. You got to place the strategy and trade logic first, right? The reason that I'm saying this is, and I want you to think about, it's okay to think about like the professional trading world. Listen, this is the vast majority of the people, the world, right? They're involved in markets. They're infatuated with market direction. Come on, turn on CNBC or Bloomberg or, any of the networks. What are they doing? Oh, what is this stock going to do? What's it going to do? What's it going to do? What's it going to do? Okay, do you think that there's a firm out there, like some hedge fund and some big firm, do they just sit down and they go, I don't know, what do you think Apple is going to do? Is it just going to go up? Okay, and are they literally going to rest billions of dollars on that? Okay, is that how JP Morgan goes out and strategizes? Is that how Citigroup or Bank of America? By the way, I'm talking about the banks because the banks trade, right? No, they're placing some type of strategy, some type of trade logic first. Okay, but again, everything that you're bombarded with is all about predict. How well have predictions done over time? And you're like, not so well. Okay, the magic 8 ball ain't gonna work in your trading. You have to have the right strategy coupled with established entry and exit criteria. You don't necessarily need to be right in picking direction in a stock or the markets in order to be profitable. Okay? I will show you, okay, specifics behind this, because this is where people get frustrated and they go, but I have to be right. Listen, you can just pick a stock that's oscillating up and down. That might make you right. You just have to stay in the trade long enough, right? Think about that. Trade logic has to come first. Again, principles that are going to guide us in this business. You ready? Trade logic, allocation, directional bias. Just keep hammering that in. There's trade logic. We're going to talk about a strategy tonight. Okay? Next, capital allocation. You're like, ugh, capital allocation is like the biggest underdog. Nobody ever wants to cover it. Listen, how and where you allocate capital should be strongly considered as a viable portion of your trading methodology, because capital allocation actually takes precedence over being right. You go, what? Okay, yeah, here's the easy thing. Have you ever been in a bigger position, and in the bigger position, you panicked because the position was kind of big, and you bailed out, but it turns out you were actually right, but you couldn't hold the position long enough to be right? Huh? Does it feel like I'm talking about you? Because I am, right? Think about that for a second. Allocation truly takes precedence over being right in the markets. Now, okay, directional bias. Now, listen, I'm not an anti-chartite. Like, I'm not anti-charts. I just recognize where you think a stock might go just doesn't always mean that the markets are going to agree with your sentiments. You got to understand that being right directionally, it cannot define you as an investor. It cannot define you as a trader, for you might not be right often enough. Now, I stress this. Throw the idea in here of a tweet, because you know what? Everything that you did, and you got your MACD, and you got your Fibonacci, you got your Bollinger Band, you got stochastics, you even got Elliott Wave. You know what? You're one tweet away from getting smoked. None of that stuff matters anymore because you're one tweet away. And that's why directional bias will never take precedence in anything that we're going to do here. It's important, unquestionably important, but you can't necessarily be right often enough. You have to establish duration over direction. How and where you allocate capital can define not only losses, but it can actually be the defining factor in your overall success or failure in markets. Our war cry? Duration over direction. Duration over direction. You need to be capable of sustaining trades or investments long enough to be profitable. I'm going to make an argument. Okay? You'll be right. You'll be right. You just need to hold the position a little longer to be right. Yes? Okay? I mean, listen. You want to be right? Or do you want to be happy? It's obviously a very famous phrase. Obviously, my wife says it a lot. And this always resonates with me whenever I talk about trading. Do you want to be right or do you want to be happy? I have I have not applied this to my marriage. The logic, though, it really does work beautifully in trade. Okay? I'll always take the stance that you do not have to be right to make money. And I want you, again, to keep on that logic throughout the course of this evening. All right? And why, you ask? Because experience and watching order flow for decades, it's taught us invaluable lessons. Okay? The first one is, you ever been stopped out of a trade or bailed out of a position only to see the markets turn around very shortly thereafter? Okay? Now, that's a question that I've now asked you 3 times. Okay? Why? Because, you know, had you not bailed out or gotten stopped out or, you know, gotten out at the worst second of your entire life, think about where you'd be today. That's for people that have been involved in markets, right? That's for people that have been involved in markets. Maybe some of you haven't necessarily been involved in markets, which is why I'm going to take you through this logic right now, okay? Let's get to it. Core strategy and trade logic. As I said, what are the 3 components? What are the 3 components? Trade logic, allocation, directional bias. Trade logic, allocation, directional bias. And today, I want to introduce you to one very real-world strategy that you can start using tomorrow, okay? Obviously, we are extraordinarily risk-averse here. The most important thing, okay, that I recognize, okay, listen, I spent quite a bit of time in and around the professional trading world, making markets. I managed risk, okay, for a market-making firm. Thereafter, I helped launch a startup brokerage firm. I was involved for about 15 years in the brokerage world. And again, everything that I've seen, okay, over the years, it just reminds me like, hey, you guys, you work hard, okay, to put money into the trading account, whether it's $2,000 or $2 million. I don't care, okay? The first thing I got to do is I got to start to clip your risk. I got to clip your risk, okay? After we do that and after we debunk a little bit, okay, about strategy and logic, then we're actually going to get into the right strategy, okay? That is going to be applicable for many of you, okay? But first, let's talk about risk versus reward. When we first learn about markets, because I want to set the record straight. When we first learn about markets and trading, we're often exposed to these ideas, this overwhelming ideology of risk versus reward. Like people come out and they go, all you need to do in the market is risk one to be able to make two, okay? And it's a common strategic entrance, okay, to the marketplace, right? It's a very, very common strategic entrance to the marketplace, risk one to make two. How many people have ever done that before, huh? Have you ever looked at the probability, though, of success of that idea, okay? How many people have ever gone out and risk one to make two? Come on, again, listen, nobody else can see your answers. It's just me, you. Oh, and about, and a bunch of, TheoTrade instructors on the other side of this. So, all right, okay. Only like 10 people were talking about this right now. Only like 10 people came out. There's almost 1,000 in the room. Like, I'm like, how many people have ever gone out there and risk one to be able to make two? All right, let me show you this, okay? I like that one. I've seen this movie before. That's my phrase. Let's debunk it, okay? I want to debunk this because, listen, I got involved in trading at I grew up around it. I literally grew up around trading. But when I first got involved in Chicago in the markets, they sat me down, okay, with other younger traders, and they taught us a little bit like trade logic. This is pretty much the first example they ever gave us. You ready? I'm actually going to script it for you on the side, and hopefully, guys, you understand, okay? We're going to go out, and we're going to buy, okay, a stock. So I call every stock, and we're going to buy it at $30. So you're going to buy a stock and you buy it at $30. You with me? Good. Then we're going to turn around and we're going to set, okay, a stop. And we're going to set the stop at 29. Okay. And we're going to set a target at 32. Sound reasonable? So what happens is you bought the stock at 30, but you tied up $30. If the stock goes down $1, you're out. You're out of the contest. And if the stock goes up 2, you're out. You're out of the contest, right? It's the quintessential or prototypical risk one to be able to make two scenario. Good. Yes. Everybody? Okay. Moving forward. So just scripted that there. Now, what I need to know is from a logic standpoint, let's add some probabilities into your trading. Why not? Do you use probabilities in your trading? What is more likely? What's more likely? Getting stopped out at 29 or making the $2? So what I'm asking is, okay, you have the stock at 30. What's more likely? Going to 32 or going to 29? Now, okay, what is it? What's the answer over here? Like, what do you think the probability of hitting the stop order is prior to hitting the target price? If a marketplace, and you own the stock, if a marketplace has what we term normal volatility fluctuations and all the MACDs and Fibonacci's and Bollinger Bands in the world, is not going to save you from the fact that there's a substantially higher probability of hitting 29 versus 32. And you go, well, why? Because of the normal fluctuation. Like, what do you think is going to happen? How fast can the stock move? Down $1 versus up 2, okay? It's simply closer, okay? It's closer. And that's one of the things that so few people, they get about. Like, they totally miss the easiest logic. And that's why I wanted to talk about logic a little bit tonight. They miss, like, the easiest logic ever. It's probabilities. You ready? Let me show you a little bit about probabilities now. Options or probabilities. Hold on. Because as soon as I mention, like, this is people panic. They go, he said the O word. He said the O word. Options. Maybe you never looked at an option. I don't care. Okay? Maybe you never traded an option. I don't care. Maybe you never even looked at an options market. However, okay, are you aware that options are based on probabilities? And options, they can help us in determining the viability and practicality of any given trading strategy. Okay? Well, how? Well, what we're going to do is we're going to use options to help us assess the aforementioned risk one to be able to make two. We're going to look at this setup, okay, using options. And you're like, wait a second, what? Okay, I don't want to trade options yet. That's fine. Options are going to help you determine the probability of stock. You ready? Okay, listen to me very carefully. Deep breaths. Everybody good? Deep breaths, because this is about to get, well, deeper. Okay, I want to make sure everybody's on the same page. You know, you got questions. Okay, this is the time. As I said, better pay attention, because we're going to go from, this ain't Disneyland anymore. This is not going to be Disney anymore. We're going to get a little bit more serious here momentarily. All right, it's dead quiet right now. That means everybody is just so intensely watching, you just can't wait. As I said, calm down. There's a lot going on the screen. The first thing, okay, this is a real screenshot taken from, well, today. Why did I do that? Because it's today. And by the way, I can bring it up on a live trading application if you'd like as well. But right here, this is AMD. Why did I select AMD? Quite frankly, I'm going to tell you why I select AMD, because it was right at 30 bucks. It couldn't have been any more perfect for this example. I like to pick examples where numbers are round because it makes things easier. Okay, what you're looking at is termed probability of touching. What's probability of touching? Okay, probability of touching is based on options pricing. And the way that probability of touch works, okay, it says, and I'll give you an example. Here says 79%, right? You guys got that? 79%. It says in the next, okay, 17 days. Yes, I gave it 17 days. Why? I wanted to give us a little breathing room, right? You're going to laugh, you're going to cry, but in the next 17 days, anytime in the next 17 days, okay, we have about a 79% chance of touching or exceeding the 29 level. Conversely, okay, the probability of touching 32 is 44%. Now, people look at this and they go, but there's no if, and, or but about it. Okay, there are billions of dollars being traded in this options market. And if you were to do, okay, trade after trade after trade, you're going to find people always ask, is that accurate? It is. Okay, over time, it absolutely is. And doesn't matter how many MACDs or Fibonacci's or Bollinger Bands you use, okay, you should know this. The probability of touch is of critical importance. Why? Well, think about the risk versus reward. It's revealed. In the aforementioned AMD example, do you realize that the probability of hitting the stop of $29, it's 79%, but the probability of hitting your target price is only 44%. Let me ask you, how's that play out over time? Stop for a second and think about it, okay? Because people, I'm telling you, having watched order flow for 15 years, okay, it's like the lamb to the slaughter. And you just see people again and again and again and again. If you wonder, like, why are you talking about this? Because at some point you just be like, please don't do this. It's like watching this really scary movie and you're literally watching it from behind a screen. You can't talk to the people. You're like, don't go in there. Don't go in there, lady. You're going to get your head taken off. And you can't stop it. Okay. This is a low probability disaster. It's waiting to happen. It's a risk one to be able to make two scenario. It's one of the most common things that's done in this marketplace where people just get hammered day in and day out. And again, this one is one of the most studied, okay, areas of the marketplace. Now, what we have to do is we're going to take what we just talked about, right? We're going to take this entire logic of this risk one to be able to make two, and we're going to step it forward into something that what, okay, that positions yourself and your portfolio with the right trade logic, okay? That's what I'm telling you right now, okay? By the way, somebody was asking, like, what happens if, the market's in a breakout and this and that? Doesn't matter. Over time, if you do this, if you trade enough or you invest enough, over time, the math overcomes everything. It overcomes. And that's what people don't realize. Listen, the markets go up, the markets go down. Like if I asked you the question, let me ask you, what has the marketplace done precisely in the last year? What's the marketplace done precisely year over year? Okay? You guys tell me, what's the market done year over year? If you looked exactly a year ago, almost to the day, what's the market done? This is Amazon. Let's go in here. Look, this is a 1-year chart. And here's the spiders. The spiders are the S&P 500, right? Here's a year ago. There's right now. Oh, it's almost up. I'm just messing with you here because it's almost up. It's up like negligibly. I mean, we're talking like, what, year over year? We can even throw a percentage on this, show prices percentage. It's up 3% over the last year. Okay? All this oscillation though, it's good. It's good for you. Listen, when I say I want to position your portfolio with the right logic, let's get just down and dirty. How do you position yourself most effectively without exposing yourself to drastic risks? Because as I said earlier, and I'll keep reiterating this throughout the course of the evening, you're one tweet away. And if you have no idea what I'm talking about, you have been, literally head in the sand lately. Tweets aren't just moving markets. Tweets are rocking markets, ripping people in two, okay? We need to cut down the drastic risks, okay? We got to get rid, all right, of this low probability. Would you be interested in a trading strategy that, number one, it overcomes the high probability of being stopped out? Number two, defines your risk. Number three, provides a higher probability of success and a really high probability of success. Number four, limits capital exposure. So not only are we going to define your risk, okay, we're going to further limit capital exposure and you're going to be able to dial it in. It's why kind of in both ways, okay? I'm not just going to say like, hey, this is what your risk is going to be. You could dial in your risk to anything you want it to be. And number five, you're never going to need to buy or sell the stock. And those, again, critical. 5 things that are going to be critical to you. Let's move into it. Enter the in-out spread. Listen, in-out spreads they're designed, number one, to kind of limit exposure, but they're also designed to maximize potential, but with minimal movement in an underlying. Listen, this sentence seems so simple, it's a complete mouthful. Limit exposure, maximize potential, minimal movement in the underlying. Okay? Very small exposure, maximize potential, minimal movement in the underlying. In-out spreads, they're options trades. Oh, he said the option word again. Don't fear the options. Listen, the option spread itself, in options, they're going to allow us to limit our risks without the use of stop orders. Okay? While providing considerable upside potential. And I stress to you, spreads, option spreads. Now, you guys ready? Because we're going to get into it. Here we go. In-out spreads explained. Now, some of you this evening, is there anybody here brand new that has never traded an option, okay, in their life? Yeah? Anybody? Come on. It's good. Come on. Again, admitting it's the first step. If you've never traded an option strategy in your life, me, a couple of people, excellent. Okay? All I want you to do for the next 10 minutes, I want you to grasp big, kind of what I call broad strokes of some of the logic. You don't have to get all the nuts and bolts, okay? I just want you to understand logically what we're kind of doing. Now, for those of you that have a little bit of trade experience, okay, what you want to pay attention to is, okay, some of that more finite. And that's what we're going to get to in just a few minutes. So we're going to start with some of the basics over here, and we're going to work into a little bit more of extreme. So what is an in-out spread? What a lot of people do is they go out there and they trade a stock. Now, listen, this could be anything, and I always use stock and say a stock is trading at 100. Listen, what can this $100 stock do? If you went out and buy the stock, the stock, one tweet, and it gaps down to 90. You're like, oh no, it went to 90. And you get stopped out and there's crying, okay, and there's salivating at some point. And then you rally back up over here. And I don't know, by the end of the month, the thing could be at 110, but it doesn't matter because you got nailed here and then it rallied back up. You laughed, you cried, it had earnings, okay, you threw up a couple of times along the way. I mean, this is the life of people that just go out and randomly buy stocks. And the in-out spread is going to take all that away. And the first step is to understand this, okay? We are not going to own stock in here. The stock itself, and I'm going to detail this real quick over here, right? The stock itself, right up here, let me draw this on the screen. Your stock is going to be trading at 100. So the stock is trading at 100. We do not own the stock. We're going to go out, okay, and we're going to buy, and I'm just going to label it over here. We're going to do what's called buy, in this case, a 99 call. Now, that 99 call, it's going to cost you something, okay? And we're going to talk about this for a second. We're going to buy a 99 call. And we're going to say that the 99 call costs us, okay, $3. So the 99 call costs us $3. For how long? Well, this might be on for one, we'll call it month. 1 month at a time. So what's a 99 call give you the right to do? Okay, this is what options basically are. Well, the 99 call gives us the right to buy the stock at what? 99. Do you have to buy the stock? No. Why do you buy the 99 call? Because I think the stock is going to go up. Does the stock have to go up? No. I can't control the stock. I'm just buying the 99 call. Why am I buying the 99 call? Because I want the right to buy the stock at 99 because I think the stock is going to go up. What do I have to pay for that right? $3, which could kind of be a lot because if I'm wrong, I'm going to lose $3. I don't want to lose $3. Okay? When you go out, though, and you buy the 99 call, the moment you buy the 99 call, you're on the clock. You're like, come on, baby. In the next month, I got to go. I got to go. I got to go up. What if it doesn't go up? It goes down. You're going to lose $3. That's what most people do in options trading. They just buy a call, and then they get down on their hands and knees, and they believe in prayer. And prayer doesn't work very well in the marketplace. Just as many people are praying the market's going up, there's a lot of people that are praying the market's going down. So buying a call, okay, isn't necessarily going to work. By the way, when you buy a call and you have the right to buy the stock at 99, because that's what buying a call does, it gives you the right to buy the stock at 99, do you have to buy the stock? Huh? Do you have to buy the stock? No. Okay, you do not have to buy the stock. You could buy the call with the intention of eventually just selling the call. Everybody got it? Everybody good? Next, we're simultaneously going to go out, okay, and we're going to sell, in this case, a 101 call. We're going to sell a 101 call. And if you sell something, in this case, you collect money, and we're going to sell it for $2. Now, how long is that 101 call good for? It's going to also be good for 1 month. So what have we actually done? Now, I know people are freaking out about the 101 call. Don't panic. Don't panic. We've gone out, okay, and we're going to buy a 99 call, and we're simultaneously going to sell a 101 call. This one I pay $3 for. This one I collect $2 for. What am I into the strategy for? A $1, what we term debit. I know I'm off like the side of the screen. This is a $1 debit. Again, $1 debit. All right, bear with me for a second. Okay, if you buy the 99 call, you have the right to buy the stock at 99. If you sell the 101 call, what does that mean? First of all, how can you sell something that you've never even owned? Okay, you don't have to own it. Okay, see, options are obligations or rights. Rights, obligations, obligations, and rights. When I buy an option, I have a right. A right to do what? Buy the stock at 99. When I sell an option, I've sold myself into an obligation. What's my obligation? To give somebody stock at 101. So I have the right to buy the stock at 99, but I have an obligation to give somebody else my stock at 101. But do I own stock? No. You don't own the stock, okay? Wait, I bought and then I sold, and I bought and I sold. What's the post I could possibly make? Well, if somebody says, I want my stock at 101, I go, I don't have the stock. That's okay, because you have the right to buy the stock at 99. Then you have to give somebody stock at 101. What's the most you could possibly make in this spread? That's what they call them, spreads. What's the most you can make in a $2 wide spread? The most I could possibly make is $2, of which I paid a dollar, okay, debit up front for this thing. So what do? I buy one, sell another, buy one, sell another, and it's done simultaneously. Now a spread, if it's the first time you're seeing it, you're like, whoa, easy there, buddy. There's a lot going on the screen. The little hamster sometimes gets stuck in the wheel, okay? But what we want to understand is, number one, this spread absolutely unequivocally limits our risk to $1. You know the other nice attribute of the spread? Okay, another nice attribute. What if the stock goes down? Oh, all the way to 80. What do I lose? You guys tell me. What do I lose? Okay. By the way, somebody says, what about commission? I'll talk about commission. Okay. I'll talk about commissions too. Hey, listen, I was in the brokerage business for 15 years. Commissions are good. Seriously. If the stock goes to 80, what do I do? Okay. What do I lose? Anybody? Anybody? What do I lose? What do I make? What do I lose? I lose $1. Okay. But if it goes to 80, you're like, oh no, but this could be a really volatile stock. Could it come all the way back up? Could it come all the way back up in the next month? Could a stock go down to like, 80, rally all the way back up? You laugh, you cry. Think about this for a second. Absolutely unequivocally, the answer is yes. But you want to know something? I never get stopped out. Do you see me getting stopped out over here? My risk is $1. Do I care about $1 of risk? I don't care about $1 of risk. I don't care. I become impervious, okay, to the downside. I want you to stop for a second and think about the logic of this because people miss it. They're like all caught up in these like the little details. They're all caught up in the minutia of it's a 99 call and then a 101 call, and they forget the fact that you know what this spread does? Protects you. The stock can go down here. The most you can lose is $1, which makes you impervious, and then the stock can actually go right back up. All the stock has to do is get a little bit above 101, and what are you? You're gold, Jerry, gold. You're going to get out profitably. That's one of the key pieces of logic in here. As I told you, you think directional bias matters. Doesn't matter that much. Now, let's get into something more real. In-out spreads, and by the way, if you're a little lost right now, it's okay. Because we're going to come right back around to the same strategy, and we're just going to take it steps further. Let's continue with our initial AMD. It's Advanced Micro Devices. And the reason we're using it is because it's right smack at 30, right? We're going to use an in-out spread, though, this time, rather than stock and stop orders. Rather than buying the stock at 30, we're going to use a spread to limit risks and provide a high probability without the use of stops. Here we go. This is your in-out spread, AMD. Ready? All right. So getting down and dirty with this particular strategy. First of all, okay, AMD, where is it trading? $30. Do I own the stock? No stock. Okay. There is no stock. I don't want stock. I don't need stock. I don't even like stock. Right? So I don't have stock. Next thing, what am I going to do? I'm going to go out and I'm going to buy a 29 call. 29 call. I was just talking about a $100 stock, and that 29 call is going to cost me $2. Then simultaneously, I'm going to sell a 31 call for $1 credit. Look, what do? I pay $2, okay? Then I collect $1. What is it like net? I have to pay $1 out front. So what's the max I can lose? $1. What can happen to the stock? It can go down. It can go up. I mean, listen, you guys seen AMD? Have you seen AMD? Really? Okay? Go look at it sometime. That was the spiders. But here's AMD. AMD. What does it do? Okay, there's a reason I selected, okay, this stock. Not only is it trading there at, right smack at 30, and by the way, it closed today at 30.23. I just want you to see, okay, what the stock does. It goes down a little bit, and it goes up, it goes down, it goes up, it goes down a little bit, it goes up, it goes down. Oh, up, down, up, down, up, down, up, down a couple of times. Okay, you laugh, you cry. This thing is absolutely wild. I love it. Why? Because what's going to happen to you in the next couple of weeks? What's going to happen to you? It goes down. You're like, I'm panicking. You got stopped out. You can't get stopped out. You're in a spread. Stock goes back up. You're gold. And you're out. And you're profitable. Okay? People, listen. This is why you want to use in-out spreads. It overcomes the high probability of being stopped out. It defines your risks. Limits the capital exposure. You never need to buy or sell the stock. Provides a high probability of success. You can initially be wrong in terms of price movement and still come out ahead. You got to have this in your life. You need it in your life. And again, I'm going to show the actual trade here in just a second, but I'm just showing you the spread. All you got to do is understand the logic like, okay, even if we go down, I only have $1 at risk. And as long as you can sweat $1, you're okay, because even if it comes back up sometime in the next month or 2 months or 3 months, you're going to be fine. Now, as I said, you need this in your life. Okay? This is Advanced Micro Devices in-out spread. Now, it gets a little bit more complex when you look at it on a live trading application. This is where they start to kind of panic a little bit because they're like, but listen, there's AMD. It's a $30 stock. You ready? All I'm doing in this case, here is I am buying a 29 call. There's the 29 call right there. By the way, in the example, I made it $2 to make it nice round numbers. The real number is right here. Okay, it's like 218. Then you turn around and selling, okay, the 31s, buying the 29, selling the 31s, buying the 29, selling the 31s. What does it net out to? $1. Your max risk is $1. What's the most you can make? Okay, in this case, $1. Now, a lot of people miss again some of the logic of this. And they say to themselves, I'm going to go back to this for a second. And they say to themselves right here, right now, and this is the best time to bring it. Let's bring it to fruition, right? Okay, I know what you're thinking. Okay, The most you can lose in this strategy is $1. The most you can make in this strategy is $1. Why would you ever want to do that? I'm going to tell you exactly why. When the stock sells off, okay, you could lose $1. If the stock rallies, you could make $1. But the difference is this. You put the strategy on. When you're wrong, you're not necessarily exiting. And you will have $1 at risk. Okay? And you give yourself time for it to come back up. The bottom line with an in-out spread is this. The probability of making, okay, or being profitable on the trade is substantially higher than taking the loss. In this particular instance, it's okay to have $1 at risk to be able to make $1 if the probability of you making that dollar is considerably higher than of you losing the dollar. Does that make sense? Okay? Because when you start looking at this from a probability standpoint, you're going to go, the little hamster got stuck in the wheel right up until that point. And you realize you're like, oh, wait, I like this. So I have $1 at risk. Put the trade on, walk away from the screen. You don't have to sit there and monitor it all day. Who cares? You got to walk around like you were impervious to risk. Because the second that you make yourself impervious to risk, you'll actually start making money. Does that make sense? All right? Does it? The second that you become impervious to risk, you're actually going to give yourself a chance to be able to make money. You don't sit there and go, every 2 seconds about, a tweet. The tweet comes, you're like, yeah, I was on the right side of that tweet today. You don't know. Okay, you don't know. I mean, advanced micro devices. By the way, I love this example because AMD, this is trade war material. Trade war, you're one October tweet away from this stock ripping higher because the trade war is over, or the trade war comes to a crashing halt. Okay, crashing halt in a bad way, and they slap on some more tariffs and the stock tanks. This is good. Okay, all right. Rex was asking the right questions. When do you enter and exit the trade? Okay, how much profit do you take in this example? These are all the right questions. Good. Let me show you one more. Before I go on, let me show you one more. So this is AMD, right? Risk a buck to be able to make a buck. Pretty simple. Next one. This is actually last week's example. It's profitable. Now I did a session last week. This was precisely last Tuesday. Twitter was trading, at $42. I also used Twitter like last week because it was right, a nice round number. That was my example last week. Where did Twitter go? Where did Twitter go? I just want to show you this. So let's bring it up here. Okay, this is a live trading application. Where did Twitter go? So again, last week I did this, again, very, very similar example. And I took that screenshot right here on the 3rd. Well, all I needed Twitter to do was go up. Okay, it did go up. And you're like, but it came back down. If you had been involved in stock, you would have probably ridden the trade up and back down. Not me. I'm out and I'm profitable. Why? Because the stock traded well above 43. I mean, what are you waiting for? The stock traded well above 43. Here's the stock almost at 46. You're out and you're out profitably. That's it. End of story. Okay? You got to understand, in-out spreads, it doesn't just give you the power to be impervious to a degree to risk. It gives you the power to trade massive stocks. Massive index products with just pennies, literally mere pennies at risk. Ready for this one? So I just covered a couple of bullish strategies, right? A moment ago, I was looking at Twitter and it was bullish. I was looking at AMD and it was bullish. This is the SPX. How many people here know what the SPX is? Okay, because I know there's some newer people. Some people don't even know what the SPX happens to be. The reason I want to stress to you what the SPX is, the SPX, let me say this eloquently, is a $2,971 product. People, it is the mother of all products. It is the widow maker because you're trading like a $3,000 stock. It's just like a $3,000 stock, except with an in-out spread. This is a bearish in-out spread. Okay, it's a bearish in-out spread. I only have $1.80 at risk. $1.80 at risk. That means if I did this strategy in the SPX, I could have as little as $180 at risk. As little as $180 at risk. What's commissions going to cost me? A buck or two. That's it. Commissions, negligible. Negligible at this point in time. Now, the point that I want to make on this one, 2 points. Number one, this strategy, this one is bearish. Okay, this one's bearish because I didn't want to do all bullish, all bullish, all bullish. This is a bearish strategy, meaning that I wanted the product to go down. I took this screenshot today. This one's also 52 days out. I want to know, can the S&Ps go down in the next 52 days? Can they go down in the next 52 days? Of course they can. And that's exactly what I wanted to show you. So when I start to, go into these, listen, Twitter, it's a $42 stock. Come on, AMD, it's a $30 stock. It's bullish, it's easy, it's clean. Okay, Twitter, again, it's a $42 stock. It's bullish, it's easy, it's clean. Then you get to the SPX. It's $2,900 behemoth, and you have $1.80 at risk. It's negligible, and you could do a bearish strategy. You name any stock, okay, that is liquid. You can go in here and you can trade Amazon, $1,800 stock, okay, an $1,800 stock. I could do stuff 38 days out. I could be bullish. I could be bearish. Look, okay, you just have to know the right strategy coupled with the right criteria in here. This is a $5 wide spread. You want to see something really crazy about this? By the way, I traded quite a bit today, but want to see something really crazy about this? Why do it for 38 days? Why not go a little further out in time? Like I can actually take this trade and go all the way out to November, okay? And you're like, oh, it's not traded. All right, I can go all the way out to the end of October. The end of October, I can go 45 days out. I can go 66 days out. I just have to change it a little bit. Let's go 66 days out, okay? You could do that. Again, all the flexibility in the world. Here, let's go through a couple of examples. Everybody good? Everybody understand what I'm trying to get at here? Okay? Why do you have so much risk on the table right now? Again, when you're one tweet away from getting hammered, why have that? Have a little bit of bullish, a little bit of bearish. We'll show you exactly how to do this. Here's a couple of examples. Now, these are live in-out trade examples. I want to be very, very clear about this. The examples that I am now showing you, this example right here, that is taken directly, okay, from this trading application. I go under monitor. I go into account statement. This is just, by the way, this is some of the stuff that I literally did, okay, today. If you're kind of curious about me, this is the last 50 days. This is just an account that I use, though, at TheoTrade. This is everything that's been done in this account that I'm showing you right now has been done live. When I say live, it's in front of people exactly like you. Every single trade in here, okay? You can see in Netflix and McDonald's and Target, okay? These trades, as I scroll through, all I did is cut and pasted those right here to show you the trades that I've been doing. It's kind of what I call the summer of in-out spreads. I wanted to show you a couple of trades that I've done specifically this summer. I just thought that was the most applicable time frame, right? So here, this is MA. It's MasterCard. And this particular trade, I launched it on May 31st. I exited on, June 3rd. The exact times are listed in here. I opened the trade for $1 debit. I closed the trade for $1.73. So every $108 I invested, I got back $173. The key tonight, it's not just about consistency. It's about growth, okay, of a smaller account. Obviously, okay, you could do this with $108. But if you're not, if you're a little newer to this, you didn't even have to trade. Like MasterCard's a big stock, right? This is a $200 product. You could have traded a smaller product. You didn't even have to have $100 invested in here. By the way, yes, I have $108 invested. But if I did, a little bit bigger, I could also do what? 1080 invested could have got me back what? 1730, right? It's just altering size. It's just about sizing the trade. It's a 60% return, okay? And again, I want to express that to you because it doesn't have to be $108 invested. It could be $1,080 invested to get back 1730. Okay, it could even be $10,800 invested because there are going to be people that are watching this tonight with a $2,000 account. And there's people that are watching this tonight with a $2 million account. Know that the strategy itself is applicable, okay, to all shapes and basic sizes. Okay, listen, what our members are saying. Use this strategy to double a small account, like Dylan T, who wrote in. Listen, this is exactly what he wrote. The in-out spreads have been very helpful as I've been able to get on a hot streak and double my small account in 4 months via the use of in-out spreads. The next one is, it's all about minimizing your risk by limiting your account's exposure. in the market like Phil S. He wrote in, said, using the in-out strategy, last week I locked in $1,275 in some HAL is Halliburton, put spreads. And today I locked in profits of $1,240 on several positions I identified. I've been averaging 7% a month for the last 4.5 months, profits of over $11,000, and I've never had more than 25% of my account at risk, usually much less. People, these are, I'm throwing this up here, people are like, oh, great, 7%. This is real, okay? This is real trading. It's a brokerage firm. I worked at a brokerage firm for 15 years, okay? You want to know what's realistic? These are realistic. Let me show you guys a couple more trades. The next one, by the way, this is like, again, it's in chronological order. I wanted to show you what I kind of did this summer, because this summer had a little bit of volatility in it. So it's like, it's the summer, again, as I was saying, the summer of in-out spreads. Here's an in-out spread that I literally opened, okay, on June 11th and closed it the very next day. By the way, it's a 25-hour trade, right? Opened it for 91 cents, closed it, okay, for $1.19. Every $91 I invested, I got back 119. It's a 31% return, okay? So I'm not necessarily knocking this one out of the ballpark, but it's one day. It's one day, because I know a lot of people are wondering, like, can I do this maybe a little shorter term? Okay, this trade was good till July, but I closed it after a day. Next one, okay? Next one is EEM. Now, not everybody necessarily is familiar with EEM. It's the emerging markets. It's a wildly liquid product, okay? Here's one I opened on June 28th. I closed it, okay? What? It's almost a month, okay, plus later. I had to hold this one. I opened it for a 79-cent debit. I closed it for a $1.20 credit. Every $79 invested, I got back 120. It's a 52% return. Okay? It's a 52% return. Again, minimal risk. But what did I have to do? I had to hold this one. Okay? Truth is, you have to hold sometimes. Next on the platter, WMT. What is it? Walmart. It's Walmart. Here's one I opened on July 5th. And I actually closed it just shy of a month, August 1st. Now, again, as I said, I want to show you everything that I've kind of done, in-out spreads this summer. And I'm just showing you a couple of trades, though, sequentially, meaning that, I wanted to show you a little bit in May, a little bit in June, a little bit July, okay? We're starting to get into August, which is getting more exciting. 88-cent debit, $1.37 credit. Every $88 I invested, I got back 137. It's a 56% return. Okay, spot on. Next one on the platter, okay, is the XLE. The XLE, what is it? It's the energy sector. The XLE was another really fast and furious trade. Here's one that actually was opened in August and closed 3 days later. This is a bullish trade where I had a $1.03 debit, $1.33 credit. Every $103 invested, I got back 133. It was a 29% return inside of 3 trading days. Next one, Goldman Sachs. Goldman Sachs. Who doesn't love the idea of shorting Goldman Sachs? I just wanted to throw that one out there for you. This one happens to be a bearish strategy. I opened it again. This is getting more recent. Literally opened it on August 13th, closed it on the 14th. It was huge. Literally one day it got absolutely killed. We had a couple of really big volatile days. Every $228 invested, I got back 350. It's a 54% return. Okay. You look at the times of the trade. By the way, every one of the trades that I'm showing you was placed live in front of a studio audience. It was in front of TheoTrade. I mean, we did this trade live. We've done all these trades live. That's what I'm showing you, specifically trades that we did live. Moving on, Microsoft. Here's one that I actually opened. Again, I'll show you the opening date, August 9th, closed on the 23rd. Okay, there's the debit, there's the credit. Every $93 invested, got back 145, 59% return. Okay, are we done yet? No. Okay, why? Why be done? Hey, I think we're getting a little bit more recent here, aren't we? I just wanted to show you, listen, okay, consistency. I trade. Here is what? Another bullish trade. This is a bullish trade, happens to be an Intel. An Intel, okay, August 7th, I got bullish. $2 debit, okay, right there on September 5th. September 5th, what is that? Last week? Was that last Thursday? Closed it for a $1.82 credit. That's a big one. $102 invested, got back 182, a 78% return. You got to realize, okay, with this one, I could have what? $1,020 invested to get back what? $1,820. It's a 78% return, okay, in Again, about a month period of time. Now, as I said, I like to get really, okay, to today. How much to today? This one I actually closed, well, today. How long was this trade on for? Just shy of a month. Here's one that actually opened on August 15th. I closed it, well, today. Okay, when today? This morning. It was this morning. Executed this one in front of TheoTrade. This is a $2.30 debit to make a $4.17 credit. Every $230 invested got back $4.17. It's an 81 return. Okay, it's again critical. And by the way, this is the part that I love over here is people are like, well, why did you get bullish? Why did you get bearish? If I show you stuff like McDonald's, literally, if I show you stuff like McDonald's, okay, and come in here, and by the way, under this account statement, I just wanted to show you, here's some of the McDonald's trades right here. Okay, this is me getting out of them today. I got into something in Netflix and XLF, and I've got Target stuff on. But if you take a look, all right, at McDonald's, I had a bearish trade on McDonald's. All I was doing was sitting there, and I'm like, oh, I just need one day. I don't need a lot of days. I just need one. It's one down day. One down day, okay, and you're gold. And that's the point of the in-and-out spread. It kept me intact. It kept me alive. And I didn't have to sit there and watch it. You know what? You got no time? No problem. I love this. Absolutely love this picture here because she is effectively glued to her screen. I don't think that's a Mac. I don't think that's down a Mac. It's part-time. Listen, every trade that I've shown today was displayed live at TheoTrade. Every single trade. The trade results were showing. It's perfect for part-timers. That's what the in-out spread is about. The in-out spread, it's as hands-off as it gets. It uses set it and forget it. Just set and forget order types. It's good till canceled. You don't have to sit there, okay, monitoring the position. And again, even a fraction of time is enough to see those types of trading results. And again, we do trades, okay, all day long. We do trades all day long. People go, oh, can I look at your trade? Of course you can look at the trades. I'm showing you trades today, okay? Here's a couple of characteristics of these in-out spreads. Listen, the attributes of these high probability in-out spreads, they're undeniable. You never have to buy the stock. You define your risk. Your risk is limited to precisely your comfort level. You don't have to use a stop order. You can vary time frames and not pay more. Remember, back in the SPX, I did 52 days. Maybe I should do 30 days. Maybe I should do 50 days. I could do 60 days. I could do 90 days. The probability of profit on this spread is high. It's the perfect spread to reduce risk of even a stock portfolio. You don't have to necessarily carry all the risk of a stock portfolio because you're one tweet away, okay, from losing a big portion of your 401k. It's an excellent tool for those seeking returns to build a smaller account. Again, this is that AMD spread, but the key isn't here. It's building the in-out spread. Now, a lot of you, if you're brand new or even if you have experience, please do not let options intimidate you. The spread below, it's for exactly $1. Right? But you got to understand that a spread, to me, it's analogous, if you will, to a massive power saw. You know, you go out with these spreads. If you don't know what you're doing, just like a power saw, you could lop off a couple of fingers, right? Okay? I mean, listen, a spread is going to be the quickest, the fastest, the safest, the easiest, okay, way to get where you want to go in this business. But just like a massive power saw, if you don't know how to use it properly, cut off a few fingers. Used correctly, it's going to be extremely effective in creating returns. Used incorrectly, as I said, you cut fingers off. Now, you got to understand that you may not know options. Maybe you have limited experience in placing option trades. Do not let that portion of this intimidate you. And I've been stressing that, okay, because you need these strategies for the foreseeable market future. And we can show you how and when to place in-out spreads. It will take us a matter of a few hours, okay? But what we do here at TheoTrade, we create detailed recipes for every strategy, including in-out spreads. It's the same thing, and I've been harping on this throughout the way. You would not bake a cake without a recipe, unless you've done it, 100 times over, okay? You want to go out, you want to bake a cake, you got to have a recipe. You want to go out and you want to place an in-out spread, you have to have a recipe, okay? You wouldn't bake a cake without a recipe. Why do people trade without one? This is what you need to know to successfully enter and exit in-out spreads. First, What makes a viable in-out spread candidate? Right? Seems easy enough. Okay. How do I find the right candidate? Well, we could use Amazon. We could use SPX. We were throwing a couple out there. But you still have to know, what volatility should I seek out? What options expiration do I select? Should I do it 17 days or 30 days or 52 days like I showed in the SPX? What should be the option delta that I buy? I have to go out and I have to buy one option. And then ironically, I have to go out and sell an option. Which delta do I buy? Which delta do I sell? Which option specifically? Then how do I even build the trade? How do I physically go out and click to build this trade? Then you've got to enter in, what's the right amount of risk for me? Let me show you what we really do here at TheoTrade. TheoTrade, we create recipes in trading. That's what we're about. Okay? When I say recipes in trading, we create recipes in trading. Trading, it's all about answering the what ifs. Okay? It's all about checklists. It's all about going through step-by-step criteria. You got to know what might be a good stock candidate ETF, the correct options expiration. Okay? How much capital do I commit? The strike price and the options that you buy, how you sell. Okay? Growing a small account, what should be my allocation? We have the answer. TheoTrade has your answer. We build recipes with definitive criteria, checklists, just like if you were going to go fly a plane. Okay, pilot goes through, check, check. I mean, almost everybody that's joining us tonight, you have taken a flight at some point in your life. Okay, and if you get on that flight early, you will see the pilot literally cockpit open, going through a checklist. Then they walk outside the plane. By the way, this always instills confidence. They walk outside the plane and they grab a giant engine and kind of shake it. And you're like, what the hell are they doing that for? Ask them sometime. They go, it's on the checklist. We shake the engine to make sure it's not going to fall off. I'm like, I feel much better about this flight. Listen, you need that though in trading. You need somebody to literally give you, okay, step 1, step 2, step 3, step 4. Okay, how do I get in? How do I get out? And all the different variables. Talk about variables. What if the stock goes up? What if it goes down? What if it stays flat? If expiration is coming, there's this, there's that. I mean, it goes on and on. Every variable you're going to encounter. We have the answer to all the questions. We'll give you the right probability. We'll give you how many option contracts for the account size. We'll give you when do I close the trade. What if the stock sells off big? What's the correct return for the strategy? What if we rally massively? Can I fix a losing trade? Think about all of this. It's huge. Think about all the different variables, flow charts of it, right? We'll give you the how, we'll give you the when, we'll give you the why, we'll give you at what price. But that's just the beginning of the variables you're going to face while buying an in-out spread. You got to know exactly how to get in, okay? Now, listen, everybody thinks at this point, you know what? I like this. I'm going to go read about this. You can read about it. You can read what a spread is. Many of you joining tonight, you may even know already how to build a spread. That's not what we're here for. Anybody can teach you what a spread is. What you need is the recipe for success. You need the criteria. We've got 20 plus years trading experience. That's just me. I had access to client order flow for 15 years. I viewed and studied millions of trading accounts. Ran education for 15 years at a firm, TD Ameritrade and Thinkorswim, with the largest options order flow in the industry. Okay? You want the recipe for success. Okay? Our criteria is your recipe for success. The following strategy and the corresponding criteria requires the utmost attention to detail, and we spent years fine-tuning this trade, fine-tuning the in-out spread, the setup, the criteria, the entry, the exit, all the different variables, the approach. When you go through a course and you hit the entire section on criteria, it's designed for you to follow the steps to be able to build a trade. We have a class coming this Saturday. When I say this Saturday, yeah, Saturday, okay, the 14th. So today, the 10th, on Saturday the 14th, it is 9 a.m. to 1 p.m. Central Time. It is a 4-hour course. The class slide deck that includes entry and exit criteria, it's the checklist. It's available the morning of September 14th. Now, this course, because some people are like, oh, this is short notice. Listen, this course is recorded. It's going to be archived. And the second that the course is over, it's recorded, archived. It's available on mobile and on web. We have a full-blown mobile application through TheoTrade. You could even watch this on your airplane at 30,000 feet. Okay, the course is $497. It also, this class will qualify you for a reduced commission rate, okay, at TD Ameritrade E-Trade. Okay, now we work with a bunch of major broker dealers. Now we are not at liberty to discuss live what the reduced commission rate is. If you already have an account at those brokerage firms, that's fine. They will reduce your commission rate if you are a client of TheoTrade. But you're not coming here for a reduced commission rate. You're coming here to learn, okay, a guide to small account growth with in-out spreads. Now this is also, it's applicable, as I said, you could have a $2,000 account, you could have a $2 million account. You stick with me right now because I'm going to show you, okay, a couple of bonuses that are coming with this class that you guys are going to be, again, really, I think, shocked to receive. Bear with me for a moment as I go through this. Again, I know there's a lot of questions, okay, that are coming in. Hang on a minute, because I want to go through what this course entails. I want to show you some really spectacular kind of add-ons that we have tonight. Everybody's already in the, like, listen, by the way, I'm reading the Q&A, and everybody's like, do I get this? Do I get that? I'm going to show you everything that this course includes for $497. Here is the curriculum. Small account, okay, in-out spreads. This is the key points. Learn to construct in-out spreads. Easy to learn, okay, easy to do, easy to place. How to buy long duration options without paying more. Give yourself the gift of time. How to use defined risk reward strategies so you never have to lose sleep over your positions. It's just fine-tuning your risk. In-out spreads can be used in any market condition or direction. We're going to teach you to build your own in-out spread with step-by-step entry and exit criteria. You're going to learn in-out spreads are easily managed with set it and forget it order types. By the way, there's an entire section in this course for set and forget, good till canceled. In-out spreads can be done with a trading account of $2,000. All of these trades could be done inside of a retirement account. By the way, every trade that I did, okay, over in this account statement, this is an IRA. This is my IRA. I trade my IRA in front of people every single day. Okay? Again, smaller accounts, no problem. Large upside potential. We're going to teach capital allocation, position sizing techniques to grow your account, regardless of account size. Last but not least, you've got to follow the recipe to build the trade. Now, as everybody's hopping in over here, you know, they're asking questions like, everybody wants a bonus. Well, TheoTrade, we go beyond one class or one indicator. Listen, I know, having done this a long time, people want everything. All right? They kind of want instant coffee, instant tea. You want everything to trade. You want everything to invest. You want it at one place, and you want it at one price. Here's the first bonus that we offer this evening. Bonus number 1, access to over 84 of our classes. Everything I'm talking about right now is available right now. All of these are available immediately, on demand, and on TheoTrade Mobile. What am I saying in here? This is a bonus. Instead of just giving you, okay, access to the live event this Saturday, okay, I don't like the idea of going out there and charging you $497 for a class. And then we have another class and you pay for that, and another class and you pay for that. We're going to give you access to every class, 84 of them. How to collect income being short, the next big short, guide to selling high probability spreads, iron up, sell premium, minimize your risk, survive and thrive in extreme market volatility, day trading NASDAQ futures, covered calls, essential skills for consistency in trading, the top 10 skills for growing a small account, pairs trading. People, this is just the beginning. There's 84 classes. It's access to over $9,000 in classes alone. Okay? Why do we do it? Because we're trying to be your one-stop shop for everything that you need. As I said a moment ago, okay, at TheoTrade, that's what we do over here. We go beyond one class, one indicator. It's everything you need to trade and invest. One place, one price. So the first bonus, how about we give you access to every class that we have ever done? There's 84 classes, right? Next, okay? By the way, I love it. Somebody goes, oh, am I going to have to do this? Just hold a minute, because I love this because the questions are pouring in. Okay, Somebody's not available Saturday. It's good. It's recorded. By the way, the classes, they're not just me. We have Jeff Bierman. He used to be the chief market technician for TD Ameritrade. He basically built the Thinkorswim charts. Matt Williamson's our market neutral premium selling strategist. Corey Rosenblum, he's our senior strategist, a resident swing trader. Brandon Chapman. Brandon also worked with me at TD Ameritrade. Okay. CMT, macroeconomics, technicals, fundamentals. By the way, did I mention Jeff Bierman is also a professor of finance at Loyola teaching graduate students at $40,000 a semester? Then I'll jump down to Steve Slim Miller. Okay, Slim has been around he's been trading as long as I've been alive. Okay, 43 year. You know my age now. Last but not least, Tony Rago, NASDAQ futures and intraday strategist. Okay, all of the courses that we do, 84 courses, all taught by these individuals. You're going to love it. We have 7 full-time instructors here. Next, bonus number 2, all access TheoTrade VIP membership pass. It's free. Okay, we've never done this before. We are going to give you access 3 months. It's unlimited access to TheoStream. What is it? Live trading chat room. We just broadcast for 6 hours a day. We trade live. We trade live. Those instructors I just showed you a moment ago, they provide real trade ideas, real-time market insights. Every one of the in-out spreads that I showed you this evening was done in front of TheoTrade clients broadcasting live. We email out trade ideas, including in-out spreads. We have 5 distinct trading portfolios. Okay, we literally email out, though, these trade ideas to you. We have daily coaching sessions with timely topics. Do you realize coaching? Okay, there's firms that will charge you, okay, a couple $1,000s a month for coaching. Yeah, we'll not only coach you, but you can email us. You can email us directly. You say, hey, Don, what do you think about this trade? I go, that's the worst trade I've ever seen. Don't do it. Okay, what do you think that's worth for the next 3 months? We'll give you 3 months of support where you can actually email us. That alone is worth the $497. This is access, though, to over $1,000 in support, trades, and insight. Not done yet, okay? Along in bonus number 2, with access to everything that we do here, we're going to give you access to 59 proprietary indicators and scans. Now, tonight, I'm going to give you one of those, okay? I'm going to give you one of those, but this includes everything. It includes auto expected move, gravity points, RSI Laguerre, the Quantix, next generation squeeze, SPX expected move. That's the one I'm going to give you tonight. It goes on and on. You realize, again, you take a lot of classes here and there, and people are like, let me charge you $1,000 for this indicator and $1,000 for that indicator. Yeah, we're providing that as what? It's a bonus, okay? No catch. It's included with the course that you're taking on in-out spreads. It's a part of it. TheoTrade includes everything that you need to invest and trade. And I say invest and trade because we have classes for investments, we have classes for traders, we have classes for day traders, we have classes for swing traders, we have classes for the most hardcore option geeks. I'll show you our site in a minute. We have classes, we have coaching, we have email access to the instructors, we have live trading room, 6 hours a day, and live trades. We have every indicator and scan you're ever going to need, and we have mobile. We actually have a mobile application for both Android and the iPhone. Access 24/7. It's everything you need to succeed. We have literally built TheoTrade to be the Netflix for traders. Everything, okay, in one spot. All of it tonight, okay, is $297 for 3 months. And I want to be crystal clear about this, okay? We're going to make this a riskless trade for you. Let me cover exactly, okay, what's involved over here. By the way, go to the website right now, TheoTrade.com/IN. TheoTrade.com/IN. Why? Well, I'm going to take you through that in just a second. This is everything you get. We clipped the price from $497 to $297 for tonight. It's everything for the next 3 months. The very first question that just came up here, people are like, is this, it's just $297 for 3 months. We don't even continue after the 3 months. Okay. You're done after 3 months. If you want to be done, you're done. If you want to continue, you continue. Okay. This is not a membership. It is not a membership. You get access to everything that we do for the next 3 months. It also includes the high probability in-out spread course, right? That is coming this Saturday. access to 84 classes. There'll be new monthly classes within your 3 months. There's a live trading chat room for 6 hours a day. There's 59 proprietary indicators. There's emailed trade ideas and 5 distinct portfolios. There's daily coaching sessions with timely topics, stocks, options, futures, and we directly answer your trading questions. It's not just like coaching, okay? We'll literally say like, yay, nay, you give us trade ideas, we'll give you feedback. TheoTrade.com/in. Now, we're going to take it a step further. Not only are we providing you all those bonuses in the course, we're going to make this a riskless trade, okay? Now, this is something, again, we have never done before, ever. And a lot of people have followed TheoTrade, okay, for years. We've never done this before, okay? Everything you need to start trading, from absolute novice to expert, okay? If you are brand new to this, I want you to know right now, and I'm going to show you this in a second. We have an entire Start Here menu. Do you know what the Start Here menu is for? For people that have known nothing, okay, about trading. You're literally walking in completely blind. But before I get there, okay, I want you to know from nothing to absolute expert. For the first time ever, we have a money-back guarantee. You must trade with us over the next 3 months. If you're not satisfied, okay, email support@theotrade.com. Provide us the details of your trades and receive a full refund. Okay, I'm going to give you the stipulations because it's got to be fair. It's got to be fair. Here's the stipulations. Okay, you got to use 10 trades using in-out spread, and you have to use our criteria. You're like, I decided to come up with my own thing. We want you to be satisfied. Do 10 trades, in-out spreads following our criteria in the next 3 months. That's easy. Your initial account value must exceed $2,000. You must follow our criteria. I put that in there twice. And by the way, the trades that are done have to be in a real account. They can't be like fictitious, like, I thought about trading. Okay, this is not paper trading, people. Okay, plain and simple. Listen, there's there's nothing out there like this. I'm not even putting stipulations on what satisfied even means. I'm just saying you trade, okay, over the next 3 months. You do at least 10 trades, you follow a criteria, we're pretty sure you're going to be satisfied. It's a riskless trade or your money back. By the way, we even have like people like, how much is it again? It's $297. Okay. There's even PayPal that we have on there. There's no interest for what? I think it's 6 months. Okay. You could put whatever on your credit card or whatever. But if you're worried about interest, PayPal's got no interest for like 6 months on there. Now, you need to get into TheoTrade now. Okay. We're going to work with you directly. Because we work with people directly, this is very intensive on our side. Again, I stress to you, it's a completely riskless trade. Okay? And what we're trying to do with this, all right, is approach it so that you are not only comfortable trading, but you get satisfaction out of the trades you're doing, and we start to perpetuate a business of you trading. Okay? As I said, we're going to work with you directly. You can email us. You can hit us up anytime in the chat room. We are very strict on this. There are only 23 spots on the TheoTrade riskless trade deal. The class is coming this Saturday. Okay? We have X number of spots. We fill them. Why? You realize how many people, think about this, how many people are going to be emailing me their trades in the next 3 months. Okay? Listen, it's just matters of trade size. We trade live. What that basically means is, number one, I got to review everybody's trades. Number two, the trades that we do, they can only be so big. We can't have 2,000 people going to a class, okay? That's it. We have 23 spots on the TheoTrade riskless trade deal. Not extending it any beyond that because it is that intense for our instructors. The $297 offer, it's never been available before. 9 a.m. Central Time on September 14th, okay? The $297 deal is gone. A little bit about what our members are saying. Thanks. I just finished my first ever quarterly trading report and I grossed 21% return on investment. Thanks for all the help. Looking forward to your intraday course tomorrow morning. Fantastic service. I became self-directed with my trading through education I got here. Thanks, TheoTrade. I'm up $4,000 this week. Okay. And again, I can go on and on and on. And from these quotes, again, I want to refresh everything that we're doing tonight. You have the guide to small account growth with in-out spreads. It's a class that is being held September 14th. The bonus number 1 is 3 months all access, okay, pass, right? It's free. That is included with the course. Everything's archived. The room is 6 hours a day. We email trade ideas. Bonus number 2 over here. By the way, the coaching and emailing us, it's all part of it. Bonus number 2, unlimited access to all the different classes that we do. Day trading, swing trading, technical trading, options, beginner trading, advanced options, new monthly classes. TheoTrade.com/in. In fact, we're going to go there right now because follow me to this link right now for the SPX expected move indicator. As I said, follow me to this link. Why? Because this is where the indicator that we promised you a little earlier today was going to be. Here we are. All right. And again, I'm going to throw the web address up there once again for you guys. As I said, it's TheoTrade.com/IN. Again, it's the guide to small account growth with in-out spreads. They're here. They can answer questions on it. Today, it's $297. Okay. Everything. Again, all the details of it here, but I want to go through, again, the bonuses. It includes 84 of the classes. Okay. It includes, again, all those classes are 24/7. Again, it's like the Netflix for traders. Bonus number 2, 10 hours of live in-person support each week. We interact with you. You can email us. Again, are we limited? Yes. Okay. We have limitations. That's why it's open to 23 people. Again, there are high probability trade ideas that we're sending out every single week. There's turnkey trading portfolios, 59 proprietary indicators. Feel free. As I said, we have Visa, MasterCard, but on PayPal, because somebody literally came in, they're like, $297. PayPal has got, again, 6 months. I think it's interest free on there. Fine. Okay. Here's also your SPX expected move indicator. Again, I'm going to throw this web page up there. I also want you to see, okay, if you need to get a hold of us, you just go click "We are here," and you can type directly in there, support@theotrade.com. But I'm going to show you a little bit about what TheoTrade looks like, and then we're going to answer a couple of questions, okay? Will literally be maybe 4 or 5 more minutes. It's TheoTrade.com/IN. Again, go to this page now, click Add to Cart. You want the SPX expected move indicator. It's down towards the bottom of the screen, okay? But all those indicators, they are also on our site. What does our site look like? This is TheoTrade. Welcome to TheoTrade. This is the live trading room. Okay. Look, this is the clients. They post a picture in here. They talk throughout the course of the day. There are, again, people constantly in and out of there. By the way, somebody's already asking the question again. All right. This is not a membership. It's $297. I'm going to come to that here momentarily. It's not a membership. It's just $297. That's it, people. Okay. So this is the actual room where you broadcast live. Again, when do we broadcast live? We start at 6:20 Pacific time. That's 10 minutes before the cash open. That's 8:20 Central, 9:20 Eastern time. The next thing, start here. If you're brand new, what do? You start here. It's the absolute basics, okay? For absolute neophytes, you've never been involved in the marketplace. Next, I show you all the classes. This is the class archive. There's option classes, newbie classes, technical analysis, day trading, trend trading, okay, hedging classes and futures classes and stocks and pairs. It goes on and on. You want to see what option strategies looks like? Just option strategies, okay? People, you're paying $297 for access to all of this, okay? To all of it. That's it, okay? What else do we have in here? Completely searchable archive. You can come in here and type in anything you want. As I said, we're like the Netflix for traders. Okay. It's the Netflix for traders. You can come in there. You think of any topic you want. Now, I want to clarify again on this deal. Okay. Today, it is a riskless trade. You click add to cart. Okay. It'll actually pull up. Okay. Ask for your information. Great. The part that's important on here, again, when I say it's become a riskless trade, is I'll refresh your memory if everybody is aware, and then we're going to answer a couple of questions. I'll refresh your memory in here, okay? What we're doing right now, 23 spots, okay? It's completely riskless as long as you trade 10 times in-out spread following our criteria in the next 3 months. Completely riskless trade for the first 23 people in, all right? Now, for me to answer a couple of questions, you go to TheoTrade.com/in. I'm going to answer a couple of questions. First one that always comes up here. So I have some pre-formatted questions, and then there's going to be a couple of good questions as we go in here. What do you need to get started? You need a laptop, you need internet connection. We have everything you need to get started, from the absolute novice to the most experienced and the most extreme traders. Okay? The second question, and I've already hit this like 3 or 4 times. Okay? This is not a membership. We will not auto-renew or bill you again. If you want to continue after 3 months, that's completely up to you. Okay? That's completely up to you. Number 3, TheoTrade archives everything. We know and we understand not everyone can watch live trading, right? You can't watch live trading. On our mobile application, we even have a way to speed it up so you can actually listen to us at 2 times the speed. That's scary when it's me. You can actually listen to everything recorded if you so choose. People work for a living. Number 4, we will provide you access to TheoTrade Mobile, where you can download the archives and you can view them at your leisure. You can view them at 30,000 feet. Number 5 in here, you can email us anytime. You could receive, a response within 24 hours, including trade-related questions. Okay? Trade-related questions. That's all in there. So, number 6, you will gain access to every course TheoTrade has done in the previous 4 years. It includes classes, coaching, live trading sessions. All the archives are searchable. Name a trading topic, and TheoTrade has got an archive on it. Okay? Number 7, all these trades can be done inside an IRA or retirement account, and with as little as $2,000 within the account. Number 8, we at TheoTrade can help you get approved for options. We can help you get approved for options. Why? We've basically, in place, we have deals with several major brokers. E-Trade, TD Ameritrade, Tasty. We deal with them. At 9 a.m. Central, September 14th, the 297 deal, it's gone. And we've made it a completely riskless trade for you today. You got to get results. You got to take action. Enroll for TheoTrade. You guys are going to love this. And I'm telling you, you can log in, literally sign up right now. Go to TheoTrade.com/in, sign up right now. You could hop in the chat room, be off and going tomorrow morning. You could start watching some of the courses this evening. Now, again, I'm going to answer a bunch of the questions that have come up in here. So let's get down to it. By the way, I love this one. By the way, you guys are rocking it. Very impressed. It's really refreshing to have you guys putting this together and sharing knowledge and not upselling everything and turning and burning your customer base. You've got a customer for life in me because of this approach, and I'm sure I'm not the only one. It's from David. I also like this one. Don is the most knowledgeable person I've ever heard from in my 50 years of stock investing, and I've listened to many. His knowledge of how the markets work is like sitting next to a finance PhD. Highly recommend learning what this man has to say. I've been involved in markets my entire life, right? And it just goes on and on. And again, we have a tremendous number of areas of feedback over here. Now, I'm going to answer some of the questions from the chat room right here, right now. And stick with me for just a moment, because again, as I said, you got to go to this site. It's TheoTrade.com/in. You have to click the add to cart. All right. It's $297. There's 23 spots that are open. I take that back. By the way, I'm watching people on the back end right now. Carl in Texas, David just came in from California, and I'm reading through here. Jeff, we just had Jeff from Illinois that just popped in over here. I'm going to read a couple more questions from the room as I'm trying to read some of the names that are coming in over here. Milton, thank you, from also from California, for hopping in over here. And again, please, whether you're Carl, whether you're David, whether you're Jeff, whether you're Milton, Gary from Florida just came in, hit me up tomorrow in the chat room. By the way, I kick off the chat room in the morning. I like to come on first thing in the morning. If you haven't noticed, I'm a pretty caffeinated individual. Wayne from Tennessee, literally come in and say, hey, this is Wayne from Tennessee. Believe me, we have pretty good memory. All right, a few things that I want to hop in here and denote. Can you set up charts with entry and exit setups, show indicators on the charts? Yeah, absolutely. So we can actually show indicators on the charts. That's no problem whatsoever. We can actually show you how to do that. In fact, one of the other gentlemen here, his name is Jeffrey Bierman, has done a class specifically on that. All right. The next question that came in, why is it required to start with $2,000? Okay. Listen, to trade spreads, there is a FINRA regulation. FINRA. Okay, what are they? They're an evil entity that regulate the brokerage firms. They say a minimum of $2,000 is what you need technically to trade spreads. That's why I put that in there, okay, for the riskless trade. For the money back guarantee, I put that you have to have $2,000 in the account. I think that that's fair because FINRA says that. And by the way, I'm totally, completely familiar with all the brokerage firms and all the regulations. I spent 15 years, not only in the brokerage world, but at one point I had over 700 people reporting into our group. So number three question that came up over here is, why is the subscription only 3 months? First, it's not a subscription. It's just 3 months. Okay. We want to do this for $297 for 3 months for you to experience TheoTrade. Okay. We're pretty positive after 3 months, you're going to love us and you're going to continue with us. And that's our hope. Do you have to continue with us? No, this is not a subscription. It's not a membership. There is no auto renewal. Now that's what I'm saying. We've never done that before. We've always been like, yeah, once you're in for life. No, this is $297. Okay. Listen, check us out for 3 months. We're pretty sure you're going to love us. We're pretty sure that, hey, hopefully you're with us for life. I mean, we like that kind of stuff. I don't mind saying that. Okay. So by the way, I think it was Wayne in Tennessee, Barry, okay, Russell, Garth in Ohio. Come in the chat room. If you're free in the morning, seriously, come in the chat room and chat a bit with us. Ask a couple of questions. By the way, we should be rocking again. We've got a lot coming up tomorrow. And then, of course, Thursday is the ECB announcement. All right, moving on, a couple of questions. Do we offer one-on-one mentorship for those, okay, who have never traded or just starting? May I suggest, I like this question, do we offer one-on-one mentorship? You beg and plead. Listen, I don't think you're going to need it. I'm a fairly expensive individual to try to get a hold of, okay? I think that you're going to find at TheoTrade that what we offer to get you started is going to be more than enough, okay? That you're not necessarily going to need the one-on-one mentorship. I think you're going to feel, okay, the way we have set up the number of instructors and our depth chart here at TheoTrade is deep enough unto which you're not going to feel like you need that one-on-one mentorship. But in the end, email us because that's what we're here for. Badger us with emails. We're okay with that, okay? All right, so, okay. By the way, I like this question that came up earlier. Somebody was talking about, what if the stock was in breakout mode? Won't that change the probability? You know, the one thing you learn about the markets in the long run, it's not about one breakout or one stock or one probability getting changed. It's about number of occurrences. Think about everything that you do, not one time breaking out or 5 times breaking out. But if you were to go back and you were to do 100 trades, you're going to find out that probability dictates everything. Okay? So another question came in. When and how do you exit the trade? We're covering that in the class. I can't give away the best parts of the class. Seriously. When and how you exit the trade. It's going to be based on a percentage that you're supposed to make. Now, if you can make certain X percentage within a couple of days, you're out. You take the profitability. Okay? Otherwise, you hold the trade as it starts to mature. There's a couple of different ways, though, to get out of it. Next one over there. Okay, how do you close the vertical before expiration? Again, we are going to teach you to close this trade using a good till canceled order. Okay. By the way, do I trade stocks with weeklies? Absolutely unequivocally. Yeah, I love things with weeklies in there. Okay. So Richard had a question. The cost after 3 months for you, Richard, it's $297. Okay. Seriously. Okay. And I don't want you guys to think that this is going to be a loss leader. We are not here to nickel and dime people. We're here to put together a program where people feel like, you know, when you get on to like Netflix, you're like, oh my gosh, like the first time you're on there, like, look at all this stuff. Okay. Here at TheoTrade, you're going to be like, oh, I'm overwhelmed in a good way. You know what? For $297, I still think you'd rather be overwhelmed rather than underwhelmed. All right. So next question coming in here. Okay. What's the process of creating a watch list? What criteria do you determine if a stock is worth trading? Once again, that's literally in the criteria. If I show you the class right now, step number 1. You know what step number 1 is? Okay. Determining the right product, the right stock, the right index to trade. And it is of critical importance. By the way, I want to thank everybody for the questions that are coming in. A couple more people are enrolling. I think we hit Anthony, Michael, Robert, okay? Correct me if I'm wrong. Romana, okay, from California. I'm just going through a couple of the names that are hopping in up here. By the way, we'll help you set up an account if that's a problem. No problem here at TheoTrade. We'll help you set it up. But again, if you ever need to get a hold of us, okay, after this evening, support at TheoTrade.com. Just put Don in the heading. We have a gentleman that answers a tremendous number of emails about trade-related questions here. His name is JP. Okay, you can even put in there, JP, get me through JP to directly to Don. He'll let you through the the barrier to come talk to me. There's no problem whatsoever in any of that. Again, I want to thank everybody for joining us here this evening. I hope to see each and every one of you first thing tomorrow morning. But if you work for a living, then maybe we'll see you Saturday morning. Again, Saturday morning for the class, September 14th. It's 10 a.m. to 2 p.m. Eastern time. Okay? Again, this is a very hands-off approach. TheoTrade.com/IN. Again, as I said, it's a completely riskless trade. You do this tonight. Thanks, everybody. Have a wonderful evening. Bye-bye.